Good morning, everybody. It's Thursday, May 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 2 3/4 at 478 1/4. July soybeans were up a half at 1045, and July Chicago wheat was up a penny and a quarter at 532. This morning we had, excuse me, weekly export sales, middle of the road for corn, just a little over a million, 1,014,400. That was for old crop. New crop, 244,700, which upper end of the range. They were looking for 0 to 200 there. Soybeans, 428,200 for old crop, 50,000 for new crop. Wheat sales, 72,000 for old crop, 238,300 for new crop. That's right in the middle. Meal sales, kind of upper end of the range, 323,100 for old crop, 5,200 for the new. And oil sales had 8,200 for old crop and 0 for new crop. We had jobless claims out this morning, disappointing data, increased 241,000. They were looking for a number closer to 225. So that took the stock market just a little bit off the highs here, but we've since battled back a little bit. So Dow's up 212 as we speak. Today we'll have crush out here a little bit later this morning. Estimates are 205.5, 205.5 million bushels there. So we'll take a look at that and visit about that in tomorrow's war room there. So what we know is we start the day, we've got a mineral deal with Ukraine. Treasury announced that they signed that deal late yesterday. Details are still being worked through in terms of what they've released to the media. So appears to be a favorable deal. We'll see if that ignites any further discussions on a ceasefire and stop to the war with Russia. But certainly things are progressing, I guess, positively over there. So with that, Ben, maybe kick us off with a few thoughts here this morning, and we'll throw her around the room.
Let's bounce off of first notice day. They got off there pretty early, quick. I think today, tomorrow, you get to find out if this is a dead cat bounce or we're going to put something together. We've managed to get back above the 50, still below the 20-day moving average, and really a positive turn for the week would be if we could close July above 85.5.
Hey Ben, I think just to add to that, clarify, you're talking about July corn.
July corn, yeah.
Okay.
Nice bounce. If we could close July above 85.5, I think that would be pretty positive. We are running into some resistance, so I think the next couple of days are important. But so far, a nice bounce off the lows from first notice day, and would like to see DSCO with it. I would expect again planning to be really good come Monday. But last week kind of surprised me that it wasn't better than what they published. So May 1st, we're getting to the point of the year where I think we can start having some volatility from weather. It doesn't feel that way. It's been a lot of mechanical trade, a lot of breaks for first notice, but we kind of have an open window now here into maybe Memorial Day weekend to see if there's any excitement with grains.
Yeah, very good. Justin, any thoughts here this morning?
No, I think Ben kind of said what I was thinking too. It's, we talked about first notice day a lot over the years, and it's pretty obvious that that's for a lot of reasons that we talked about why that happens. So we have a bounce off of it. To Ben's point, is a dead cat bounce. A failed first notice day rally is not good. So you got to respect that. So if we go take out the lows, this week or next week, that's usually not a good sign. That being said, we are, we're kind of getting the, horse ahead of the cart here, or the cart ahead of the horse, I guess. We've got 25% planted, and we're kind of writing it down as, got that done. Thank goodness we grew that crop, Yeah. So, I'm still kind of going with the fact that I think we're going to be in this range, that to go make new lows of the range doesn't make a lot of sense to me on today's date, and to go take out, call it December corn, go take out 470 today doesn't make sense either. I think we're kind of stuck in this choppy trade, and we're going to suck people into getting bearish on breaks and bullish on rallies. Personally, until we get some more information, maybe whether it's some trade deals or some weather, you're going to need something to start a bull market from here. You just heard a lot of people on this break as well. You see open interest going down, which we've talked about the last couple of shows. So people are kind of getting to the sidelines. Unless you go, back towards the lows or back towards the high end of the range to attract people to come in, I think we're stuck right now. Me personally looking at it, there's too many unknowns to get excited one way or the other. Nothing screams to me that you should be super short or bearish. Maybe that's because we look at, where crop insurance is and all these things where I don't see the incentive to sell, sharply below cost of production. Now, I'm not saying that we can't end up lower because that's just the market forces, and sometimes we just stay below cost of production for a period of time to disincentivize bad behavior. I'll call bad behavior being that at some point the market makes you can't pay really high rents. You can't pay for things that lose money. So maybe the market has to force that at some point. But in the short run, there's just too many things that you could get in a lot of trouble here, saying, okay, I gotta sell a bunch of stuff because prices are going a lot lower. And even though it's below cost of production, I have to grow a good crop. So I'm going to market a bunch of stuff and I have to grow a record crop to make it pencil. And I've seen a lot of people get hurt that way as well, because you do that and then you have a weather problem, your crop's 20% below where you thought it was going to be, and the market rallies and now you're stuck. So these kind of markets can wear on you and make you do uneconomical decisions. And I've seen that happen a lot of times. I do think that we're in a period where it reminds me a lot of like 2015 through 2019, where you might get a window of 2 or 3 week, like a rally, 2 or 3 week rally. And it's very sharp and it's very hard to sell into that. I think we could be in that. If you look at those years, almost every year that happened, where it was like a June or July rally and it was violent, but it didn't last long. I kind of think we might be in that kind of a time frame, where we don't have the gunpowder maybe for $7 corn, for example, even if we have a weather problem. So I think you got to be really, really disciplined in where you need to sell if it happens. Really factor in your crop insurance. And be smart, because it could be, because, right now people are hurting. So you could see where people get forced to do something, sell aggressively, try to bail themselves out, and it ends up being the worst thing that could happen to them. And you hate being in a bull market, and that's what takes you down as a grower. And I've seen that happen multiple times. So
Justin, real quick, it was nice to see ethanol production up and stocks go down. That was kind of the first week in a while that we've seen that.
Yeah, it's been a while.
So that was, maybe that's a hint at, we are certainly, we've talked about it a number of times too. We're inexpensive on the global stage for corn. We're competitive and doing business. So it's nice to see at least like the ethanol sector ramping up a little bit, Yeah.
And that's what's tough about these markets is a lot of stuff hasn't changed, but we've gone up and down several times. Right. And we kind of try to find headlines. I shouldn't say nothing's changed. The safrinha crop, weather has gotten better for sure. China has gotten drier. Dustin wrote this in the letter. That's a tough one. China's a tough one to diagnose at all.
Yeah.
But if you look at the global stage, it probably hasn't changed much. We're still need to grow a good crop in the U.S. But the market moves make you kind of come up with fundamentals to follow it. I still go with, we broke into first notice day. We've broken in first notice day in the March contract. We're doing it in the May contract. We'll see what happens when we come out of this. But yeah, I haven't seen anything big fundamentally change. I mean, if we didn't think we were going to plant the crop, we'd be a lot higher. So the fact that we're selling off because we're 25% planted, I think that's kind
of the drought in the U.S. narrative is kind of subsided somewhat, right? I mean, some of these rains.
Yeah,
you
it's
look
hard when you look at the radar.
Yeah, especially today driving in. Yeah, it doesn't feel droughty.
Well, it's hard. I think it's hard because I never trade a drought in March.
Yeah.
I guess some people do. So it's like some of these moves, you're kind of like, we didn't think we were going to get it planted. We thought we were going to have a drought in March, but apparently some people do. I still think there's probably more outside markets, people getting on the sidelines, boredom. It's hard. It's a hard trading market, unless you're just a guy that can trade fade moves and trade choppy markets, which some people are great at. For a lot of people, it's an emotional disaster because you want to sell every break, and we've been at this price for a long time.
I wanted to ask too, because I came on a few minutes after he started, but did you guys talk about the increased reference price discussion?
We did off camera. I mean, we hadn't really referenced it, but I think obviously Devil's still in the details and it's early, but yeah, we were just kind of loosely talking.
Yeah, and there's no certainties yet, but I guess the point with that is that we last year we had the Farm Act, right? And there was no trade war yet. Yet it was $35, $40 an acre on average paid to everybody just because of low margins. And now we're talking about trade war, and we've already been kind of assured that if the worst comes, push comes to shove, and we're actually going through with China not buying any beans this year and prices are lower, there's precedence that they're going to compensate it, and there's obviously support in Congress for it. And they're already talking about just raising the reference price right now for Farm Bill. So that's in a way, I watched this happen in 2020, is that when we were in COVID and we were in the low threes, a lot of people said, look, if it's going to go to 280, I need to sell. I need this 50 cents from 330 to 280. When in reality, their metrics were that they would actually make less money if the market were to go up to 4 as it stood that day, because of the Farm Bill payments that they would no longer be receiving, the insurance payments they'd no longer be receiving. So you got to think about your balance a little bit. If you're the only producer to sell, because you think a trade war is coming, and you sell and the market goes to 375, and you also get MFP 3 payments and Farm Bill payments, great. It's a windfall. That's you're going to be happy you sold. But if you sold below cost production and you have a 5% yield cut and none of your neighbors sold, and it goes up 20% and there's no Farm Bill and no MFP 3 payments, you're going to be the odd person out in that case. So I think for us, it's just don't take big bets on what's going to happen. No one knows what's going to happen coming up. Definitely don't not hedge, get yourself into a good balance. But I've seen a lot of, I'm going to sell everything because it's going down. And that, to Justin's point earlier, it could be the very right thing to do. It's just that it is a bet, and it could have a 50-50 outcome on either side of the coin. Yeah,
hedging generally is a good thing, right? But the reason we spent so much money and time on developing our software is to show you that. It is at some point you're just making it. It's a speculative bet. When you get into double, triple payments, and you're betting on the downside, that's exactly what it is. And there's no other way to say that. It's a bet. It's like if you're at high prices and you have good margins, and you also buy futures or buy calls, you're betting on the upside. And if you get hurt, it's because you were wrong and you were betting. So you have to, if you're looking at it just as a producer and a hedger, you have to know where all those things kick in and what bet you're placing. Going in and just betting blindly and not knowing the outcome if you're wrong can be a huge mistake in this environment.
Yeah, especially with flex rent agreements. Right, I've seen a lot of flex rent agreements, but it's price only, and we tend to forget about those. In early 2020, looking forward to the 2021 season, and it's we just get to $4. Let's go sell a bunch of corn because that's been a good price recent history, and then that year trades to 7. All these flex rent agreements kick into major bonus territory, and you're kind of left with a little too much sold, right? And I'm kind of cherry picking that year, but it is 2020 is kind of a reference year for us. There is a chance that we come out of this with some trade deals that are more friendly than we anticipated.
Well, and it's a reference also because of the situation with crop insurance and farm bill payments, where we are price wise versus triggers on those things. And that year, a lot of people got caught because they just felt like they had to get super sold because we're going to, crude oil went negative, we're going to zero, all those things. So it's super important to be disciplined on, the upside and downside of markets. Like you have to be very disciplined. So.
Yeah, Kyle's point comes well taken. Bet on the market, not the government.
Yeah.
So, yeah, couldn't agree with you more, Kyle. We got just coming into the open here. Rye, give us a rundown real quick on beef and hogs, will you?
Yeah, a little bit of a setback yesterday. I think it's to be expected here. We're going to see some corrections once in a while. So we didn't really do too much damage chart-wise. June slipped. Saw a little bit of weakness in the beef. Didn't even really touch any kind of near-term moving averages. Just did not have that in us. So no big change in open interest. Open interest actually up yesterday. And I think just overall, like the cash sentiment's still pretty positive here. It was kind of a wide range of trade initially. Saw a little bit of 214 in Texas, 218 in Kansas. So, generally anywhere between 2 to 5 higher this week is what I think the market's going to start to price in here. Dress sales were 350 or 340 to about 350. So we're talking maybe 8 higher. So we're still going parabolic cash wise in the live and on the feeder side. So, how much is the market already baked in? It's hard to say, but generally speaking, we are in kind of a good seasonal time frame between now and kind of mid-June. I think this is going to be kind of the shot. I think you baked a little bit of that sentiment in on the early side, just because it's kind of where the money flow has been. But yeah, so I wouldn't be surprised if we, start running into a little bit more resistance up here. I think that 220 level in cash has kind of got everybody whooped up. Everybody's looking for ways to find it on the regionals. But yeah, the trade is very strong. The futures are very strong. We are a little bit overbought, but I think generally speaking, there just really hasn't been that much concern. Obviously, beef prices were down slightly yesterday after the substantial rally that we've seen. But overall, I think the sentiment still remains pretty firm from just a domestic demand standpoint. And that being said, exports were definitely up a little bit here, 12,900 metric tons. So still relatively firm. I don't think there's a lot of concerns there, but just on the macro side, there's definitely going to be some chatter about GDP and jobless claims and what's going on down the road. This could definitely affect the longer term demand outlook. But overall, it's more just like we'll wait and see what happens, I think, at this point. But we're going to price in that better cash, I think, between now and the end of the week. On the hog side of things, a little bit of disappointment in the carcass, and on the cash side of things, just some slight weakness. We did make new lows for the move here in June, just kind of stalled out. I think everybody wanted to see what was going to happen on the export sales report. China was non-existent, but still 34,500 metric tons were sold. So, I think initially that's still pretty firm business here, even ex-China. So I think there's going to be a lot of just kind of watching that weekly progression and how it goes, and a lot of the rhetoric and the headlines that are kind of coming along with it. But as of right now, it seems like you baked in a lot of kind of negative sentiment for right now, and we'll see if support levels hold. So still seeing how cash going to shape up at the end of the week on the hog side.
All right. Appreciate the update here. Let's get a quick rundown. July corn's up a half, 476 is the last. July soybeans are down a quarter at 1044 and a quarter. And July Chicago wheat's unchanged at 530 and 3/4. Tomorrow is Friday, so we'll have Fun Fact Friday. Be sure to tune in. You never know what you're going to get. So we're looking forward to that. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.